Welcome to a new update. Tomorrow it's FOMC time. But historically, is Bitcoin ready for another run, or are we expecting a crash to take place as we are 10 months prior to the actual Bitcoin halving? And that often results into a crash, or we get another bear market rally or the start of a bull cycle. That's what we're going to discuss in this update. Also, make sure to be there tomorrow evening at 7:30 p.m. Central European Time. I'll be live streaming. I'll be covering everything surrounding the FOMC statement, surrounding Powell's speech, and also surrounding the upcoming events, because Powell is not the only important topic to follow during this week. What we're also looking at is that we are going to focus more on the trading part. I'm making altcoin portfolio updates in the Discord. I'm also making that in the Saturday videos. If you want to stay tuned on that, make sure to join our Discord where you can find more information. And also make sure to check out our trial week or premium membership if you want to get real-time updates. Thank you for our sponsor OKX, which grants you up to $60,000 in sign-up bonus until August 1st. And you get a lifetime 20% trading fee discount if you sign up through our affiliate in the description beneath. And also make sure to like and subscribe to this YouTube video if you do enjoy the content. Now, when we're looking at the markets, I've got a website here, which is Forex Factory. You can also use investing.com. These are two important economic calendar website which grants you all the information that you need. Last week was not really focused on macroeconomics, hence why we've got a relatively boring period. But now we are seeing a pretty heavy and substantial week when it comes to the macroeconomic events. So we're looking at PMI from yesterday. The only green number we've seen is the number from the US. The rest of the numbers were relatively bad, as we can see here, which means that the economy is not in a great shape all across the world. Potentially we are going to face a recession or going to have that, but at least we saw terrible numbers coming in. Today we've got consumer confidence, which is also an important indicator of how strong the consumers think that the economy is actually at this point. If that starts to make a U-turn, they might be spending less, and then you get retail sales that starts to drop, but also the expectations from producers, and that's when the economy starts contracting. When we talk about that, we've got some important events taking place. First of all, we've got the FOMC statement tomorrow with the expectations that we're going to have another rate hike. So the markets are currently pricing in another rate hike, and they are expecting a final one to take place as well, which means that we've got two more rate hikes, and the markets are currently pricing in those two rate hikes, which means, and that's what we're seeing in the markets for Bitcoin now too, is that we could be getting a case of sell the rumor, buy the news, which means that we've had some tremendous events when we in regards to the inflation, okay? CPI came in way lower than expected. Even core started to drop. The month-to-month data was better than expected. PPI starts to become negative almost. And also PCE starts to fall off a cliff. Those are the signals that Powell really wants to see that took place after the previous event. Which means that what we're seeing right now is that we're seeing a sell-off going into FOMC. Usually crypto native people are eager to have a substantial opinion about what FOMC is going to do. And right now we see a lot of fear going into that event, causing this sell-off to take place. And the question is this sell-off the actual final buy opportunity and that we're going to reverse after the FOMC or anything of the upcoming events? Or are we going to continue falling through? At least what we know is that the markets are pricing in two rate hikes, and markets are expecting that and might be even expecting more, which is that there is a lot of fear in the markets, and that is fully focused on crypto mostly, while we are actually going to get an ETF taking place or potentially getting one in the next year. And we are facing the FOMC statement, which can actually become more positive because we are seeing the fall of a cliff on the inflationary data. And additionally, we see a strong labor market. So there's no real reason to expect any big recession at this point until now, which means that if the inflation starts to drop, and the month-to-month data is getting there, we might be getting into a phase that we are not getting a rate hike, or that we're pausing again, and that there is a reason to actually see the end of the hiking policy. And as I mentioned, when the end of the hiking policy is there, that is when the markets start to run again. So tomorrow it's FOMC statement time. On Thursday we've got the other important events, which is the ECB is going to state what they are going to do with their refinancing rate and a monetary policy statement. And finally, we've also got advanced GDP. Advanced GDP is the most important one. It gives a signal on the strength of the economy. If that's going to be terrible or less than expected, you are probably going to see a pretty substantial drop on the dollar, a drop on the yields, an increase on gold, and probably an increase on Bitcoin too, as Bitcoin and gold are pretty heavily correlated. So that's important. Unemployment claims as well, but not expecting too much from that. And then Friday, the cornerstone of what the FOMC is using for their policy is PCE, which comes out. The expectations are that PCE is going to drop again substantially. And if that is the case, we drop beneath 3%. Core is going to drop beneath a substantial level too, which gives an indication of fact that the policy is actually having an impact, and also that we're going to face a period where probably inflation is heavily topped out and getting into a low, which means that the federal funds rate is topping out too, and that is the moment where you're going to expect the yields are going to start off dropping down. So right now we see an increase on the yields, but we still see a massive yield bearish divergence here. So I expect that after tomorrow, or at least, but maybe we are having a 25% bips or 25 bips rate hike, and then after that we get terrible data on the economy, which automatically opens up the case that we're not going to have rate hikes anymore. Or FOMC or Powell says we don't do rate hikes anymore, inflationary targets are going to be met. We see that they are dropping faster than we expected at this point. The data is coming there, so one more rate hike and we're done. Then the yields are going to make a U-turn, especially if that is going to follow through with bad economic data or even a lower PCE. So that is when you start to see some U-turn here, especially with this bearish divergence, which we also saw in 2018. That is going to grant us some momentum. DXY is currently having a bounce. It's getting into resistance areas, so I'm not potentially betting too much on this, as we are getting into the area of support that we used to be in for a long period of time. We are still trending down, so I assume that in this week we are finding ourselves into resistance and start to follow through, which is usually going to grant us some momentum, which is going to be taking place on gold as well. Now, when we're looking at Bitcoin, we see that we have been breaking south. But if we are looking at the higher time frames, and especially if this week is not going to fall through to 28k, but just balances out and maybe even reclaims some crucial levels, this weekly is actually quite good. This weekly is actually showing us that we're just finding ourselves into a higher low and then start preparing ourselves for the next impulse run. When you start looking at the previous history of what Bitcoin has been doing in terms of the cycles, you have got two cases, which is we've had a halving taking place in July of 2016, which had a pre-halving run from May to June, which rallied from $450 to 800. And we've had a case that 10 months prior we started to break out and had our rally towards the 6.18 Fibonacci level, which after that caused us into a substantial period of consolidation. That is the first case in which 10 months prior we started to make that breakout. The second case is that we've had this anticipation of a halving taking place in June and May of 2020, where we've had this run up, which was also approximately 10 months prior, and then we started to correct until the new rally started to take place, but that one got slammed through based on the fact that we've had the COVID-19 crash. So what do we see here is that we're currently seeing a case of just consolidation. So if there is going to be another run, we can start identifying the 618 Fibonacci level, which is at 34 to 36k or 48 to 50k. Why am I referring towards that case? Well, if we look back into historical price action, I want to use the 2015 case and the 2019 case, in which the 2015 case, we initially rallied towards 570, and then second, we rallied towards the 3.5 and the 3.82 Fibonacci level. In this case, we rallied towards the 3.82 and 3.5, 3.5 Fibonacci level as well. In this case, we didn't do that yet. We're just consolidating, and we are expecting us pre-boom, pre-halving to have this case to take place towards 50k. So I think ultimately, if we are looking at the price action for Bitcoin at this point, we are just having a relatively normal correction. The thing is that most of the people are seeing the case of the previous 2 years. So we've had a crash from 69k to 15, and that means that every bear market relief rally or every kickstart of a bull cycle, people will continue to expect the markets to continue falling down. So what do we need to actually continue falling down, and what are the crucial factors for that? Well, if you look at the price action, we are facing a pretty substantial resistance zone at 32.5k. If 32.5k breaks, that is the moment that you can start assuming we are rallying towards 40k plus, potentially even 45k. So until then, we are just identifying a case of range constructions, which means that also with the thesis on the altcoins, now is the time to accumulate, to DCA, to buy the dip, although I understand that it feels quite uncomfortable to do so. What are crucial levels to break through if we are definitely going to get further downwards momentum? Well, there are a few indicators that you can see on this chart. We are making this uptrend here. So the last low is at 25k. If Bitcoin drops beneath 25k, it loses 25 to 26. It loses a few significant levels. It's losing the 200-week MA. It's losing the 200-week EMA, and it's losing this entire construction of the last low. As long as Bitcoin stays above those, you want to accumulate altcoins. You want to accumulate Bitcoin because it might be the final opportunity that you are going through. So tomorrow with the FOMC evening, it might not be the most important one, but we could be getting into a case where we are doing a sell the news, buy the rumor event. I'll be there tomorrow eve. I'll be also here on Thursday to summarize everything that we know from FOMC. Make sure to tune in, make sure to like these updates, and I'll be back tomorrow. Ciao.